Hello and welcome to a new episode of 100 English. Today we are going to have a review on the previous stock recommendations or the stock analysis that we have done in the last 1 year. Why we are doing at this particular time is mainly because of the fact that as you know, the Funder 360 channel, YouTube channel for stock investors as well as for traders that has been started almost a year back. And during this 1 year, we have given a few stock suggestions as well as we did a few stock analysis also. Based on that, we have given few suggestions for our viewers. So now I felt this is the time for us to take a review on the past suggestions that we have given for our viewers. Please keep one thing in mind that all the stocks that we are going to review is not taken 1 year back. A couple of stocks that has been suggested 3 to 4 days back only. So it doesn't mean that all the stocks as a whole we have recommended 1 year back. Not like that. Why I am mentioning this? Because when you see that some stocks that has given 200 or 250% returns, that doesn't mean that has given these returns almost in a fortnight or a month. Not like that. In the past 1 year, some stocks has given negative returns in the 1 year period itself, though you hold it for that much time. But some stocks, they have given unbelievable returns in a very short span of time. But we are just concentrating on the average returns. Now let's have a review on all the stocks. So I have collated all these stocks. We did analysis as well as suggestion in the last 1 year as a Excel sheet. Here you can find that, and I have taken the prices that on, and I have taken the prices as on 4th November 2022. So the first stock is Shastra Sundar that we have recommended at the price of 469. But as on 4th November, its price is 299 only. So that gave a negative 36% of return. That's a negative return. That's in loss. So the stocks which are in loss, we shall mark it as red. And phase 3 that we have recommended at 268 and the current price is 337. That we had given almost 25% of returns to the investors. VR Logistics, that's the third stock that we have recommended at 453 and gave a return of almost 32%. One other stock is NIIT Limited. We had recommended almost 3 to 4 months back at the price of 435, and now that's trading nearly 300, 293. So almost 32% of negative returns, 32% loss. That also we shall mark it as a negative return, or that's in red. Another one is IEX, though that's a very good stock. After our recommendation or suggestion, that had turned out to be a disaster for the investors. Nearly 46% of negative returns or loss that had offered to the investors. So that also we shall mark it in red. Other one is Mirza International. We had recommended nearly 10 months back at 67 rupees. Now it's trading at 302. That had given almost 350%, more than 3.5 times returns to the investors. Other one is BPCL, Bharat Petroleum. We had recommended at 431. Now it's trading at 302 only. Almost 30% of negative returns or 30% loss. But what you have to take into consideration is BPCL has given a huge dividend of 74% in the past 1 year. So to justify the return on investment, what we can do is we can add this dividend to the current market price so that we can get the actual return on investment. Why we are doing this? Mainly because of the fact that whenever a company gives a huge dividend, obviously there happens a dividend stripping on that company's price. So we shall add this 74 rupees to the current market price, so that you will get as 376. So the loss came down to 12.76%, but still that's a loss. So we shall mark it as red. Other one is Adani Enterprises. Adani Enterprises, we have projected that as an asset protector company almost 1 year back. Market went up and down, but Adani gave very decent returns. In fact, not just decent, that gave more than double that offered the return on investment to the investors. We have recommended at 1461, and now it's trading almost 3825. Almost 161 percentage of returns Adani offered. Other one is Garden Reach Shipbuilding. We suggested at 205, and current market price is 509. Nearly 1.5 times returns that offered to the investors. Other one is Nigel Adversaries that we have recommended almost 3 to 4 days back, exactly 5 trading days back at 157. Now it's trading at 214, and within the shorter span of time that offered 36% of return on investment. The next company is the auto ancillary company, that's Craftsman Automation. That also we have recommended almost a month back at 2,845, and now trading at 3,183 with a return of over 11%. STS Enterprises we have recommended at 433, and now it's 453, and that also almost 1 month back that offered at 4.62% profit. Artsons Engineering, that's a Tata Group concern, offered at 73, now it's trading at 83, over 13% of return on investment. Similarly, EPL we have suggested that almost 6 months back at 174, now that's just 152. That means almost over 12% of loss. That also we shall mark it as red. One is Heidelberg Cement. We recommended at 197, almost 6 to 7 months back. Now it's just 207. Anyway, the investors are not in loss, but still they are not in great profit. Just 5% of profit only they could be able to gather. Other one is PNB Gills. We know that PNB Gills, that's a dividend stock. We have recommended almost 7 months back, and at that time the stock price was 64, and now it's trading at 61. Similar to BPCL, here PNB Gills offered a huge dividend of 12%. Why we call it as huge dividend? Because the dividend yield is very huge. That's over 15% of dividend yield is. Obviously, this will undergo a dividend stripping. So here also we are going to add this 12 rupee to the current market price so that the return on investment will be justifiable. So 61 plus 12 rupee dividend also will add. So you'll get a 73. Then PNB Gills offer 14% of return on investment. Salasa Techno Engineering, that was another stock that underwent 1:10 stock split. While we recommend its price was 256, when that underwent a stock split of 1:10, we scaled it down to 25 rupees 60 paise. Now it's trading at 28 rupee, and the return on investment is over 9%. Similarly, Wonderla we offered at we suggested at 229. Now it's trading at 350 with a 50% of return on investment in 7 months. Jindal Drill, that was another stock, 187 we have recommended, and 67% of return that offered. One is Sri Digvijay Cement that we have suggested almost a week back at 67, now it's 66, a marginal profit only now it's having. Similarly, IDFC Bank also last month only we have suggested that stock, that also with a marginal profit. These 4 stocks, including Adani, Nestle, RIL, Pidilite, HUL, including Adani, was projected as an asset protector stock. We have projected that when the market last time touched 18,000. After that, market went down even below 16K. But still, these companies could be able to hold their price. So that's the reason why these 5 companies projected as asset protector companies. So those companies were Nestle, RIL, Pidilite, and HUL. We were not that much bothered about the return on investment of this company because that's considered as an asset protector. So never expect a huge return on investment on these asset protector company, but that companies could be able to hold your stance while market go for an erosion mode. So among the asset protector company, Nestle could be able to offer you almost a 7 percentage, RIL also over 7%, Pidilite nearly 15%, HUL, Hindustan Unilever for over 5%. And next stock is Vedanta. Vedanta we have recommended at 262 and now it's trading at 320. Here also we are compelled to add the huge dividends because Vedanta underwent a lot of dividend stripping as well as in the FNO sector also it went for adjustments. So a huge dividend that offered in the last 1 year, that's 96 rupee dividend, that also we have to add with this 320 market price. So it will be 416, and in that case that will offer nearly 60% of return on investment in the last 8 months. Other stock is IRCTC. IRCTC, while we suggest it was trading nearly 402, that's adjusted price. IRCTC underwent 1:5 stock split, and the adjusted price when you consider it was 402 and currently that's trading at 757. But one thing that you have to keep it in mind is though it's now trading at 757, in between after we gave a buy signal it went up to 1092, that's adjusted price. Similarly, other stock was Prestige Estates, that's a real estate company, that's a 435 we have given the recommendation. I believe that's in April or so we had given the recommendation 435, now it's 446, that's in a profit of marginal 2.5%. Other stock was Delta Corp, we have recommended at 206, now it's trading at 217. But still similar to other one, it's a year's high. After we recommend it went up to 322. One other stock was Bajaj Finance, that's a heavyweight, 6,224 we have suggested, now it's trading at 7,212 with a profit of over 15%, nearly 16%. So among the 32 stocks that we have recommended, 5 of them went into loss. In fact, companies like IEX, NIIT, Shastra Sundar, all those stocks went into deep loss. IEX went to almost 46% loss. NIIT gave 32% loss, and Shastra Sundar gave 36% loss. So this is the basic analysis of the recommendations that we have given in the last 1 year. So what we can find from these recommendations and it's how it's turned out to be. Obviously, if your position sizing is correct, you could be able to get more than 60% of returns over last 1 year. Position sizing means you have to invest the same amount in all the companies. In that case, that would have been fine. I'm telling about 60%, considering the fact that you hold the stocks still. Because if you could be able to exit from IRCTC when it touched the all-time high or Delta Corp all-time high, then it would have been much better. But I'm considering that all these stocks still you are holding. In that case only, we are considering that's almost 60% of return on investment, maybe more than that. Okay. So what's our learning from these stocks? We could be able to find that except a few stocks like Adani, rest of all the stocks that rallied too much is they belongs to the category of mid-cap stocks. Why it has been rallied? Mainly because of the fact that the presence of retail investors. But in the last year, we are not anticipating the presence of retail investors this much. That's the main reason why our analysts couldn't be able to forecast to that extent. We underestimated the power of retail investors. That's exactly happened. When it comes to the stocks that went into loss, in fact, that's a deep loss like IEX, obviously, there is no justification for that stock to correct to this extent. Because we know that they are still holding nearly 97% of the power trading domain, but underwent to a great correction. Similarly, NIIT still holding with the margins. They are much better in that edtech and training space. matured company, matured cash flows, still that couldn't be able to come out as a investor's favorite. In fact, these kind of companies, the investors means that will be the retail investors, they should push it up. But on the other hand, in the case of IEX, the institutional holding remains constant, but retail investors were not showing much interest after the bonus also. Similarly, BPCL, we couldn't able to anticipate such a move from government of India that they put the disinvestment thing there in the shelf. Deepam, we couldn't anticipate that from Deepam. We are in anticipation that BPCL disinvestment would have been taken place that latest by last September also, but that didn't happen. That was the main reason why BPCL shares went down. Other one is Shastra Sundar, that was much anticipated. Majority of our clients, they have exited because that was a high risk stock, but still I am just included just for the name's sake. I believe none of our clients has been holding that company still now, but just for the sake of calculation, I added that with just to calculate the current market price. So last 1 year, whatever returns got for any of the investors, majorly from the mid cap companies, and when you buy on dips, you got better opportunities to get into the market. So those who are in the English viewership, I want to tell you that some of these stocks that I had recommended there in English channel, but majority of these stocks we had recommended there in the Malayalam channel, because English channel that is just a few months old, but Malayalam channel that's 1 year old. So all these stocks that we have recommended in both these channels collated together, and we are presenting in front of you just to assess what's basically the sentiment of market and how exactly in the last 1 year the market underwent. When we look onto the Nifty, we can find that last year, almost 12 to 13 months back, the Nifty was trading at almost 18,100 itself. So 1 year return for Nifty is almost zero. So our suggestions or our portfolio that we have suggested gave almost more than 65%. That means the alpha looks better. One more thing I want to tell you is majority of the stocks, majority in the sense among over 30 stocks, 90% of the stock that has been selected based on the cash flow and the business prospects. These two were the primary parameters while we selected these stocks. And one more thing I want to add with this thing is the target price as well as the time period that we have given while we suggested these stocks were not 1 year or 6 months or 2 months. The time period that time we suggested is over 1.5 to 2 year period. But still in 1 year itself we could be able to achieve a decent returns. In spite Nifty stood still. So that's all for now. See you in the next episode. Till then, bye from Manu.